Good afternoon, everyone, and welcome to Stock Market Today. It's December 23rd, 2022, and you've got Justin Nielsen here along with Ed Carson, and we're going to wrap up what happened for the day and also for this week, heading into a long holiday weekend. On the show today, we're going to be talking about a few stocks, including Shift4 Payments, Impinj, and Celsius. But before we get into that, let's get into the markets a little bit and just kind of see how they closed. Looks like the S&P 500 closed up about 0.6%, and the NASDAQ composite up about 0.2. Dow Jones Industrial Average, another 0.5% there, and then the Russell 2000 up 0.4%. So Ed, why don't we start with the S&P 500? And I mean, it was another one of those weeks where we had headlines kind of tossing things to and fro. What was your take on the week?
Well, I was surprised because the S&P didn't fall that much for the week. It felt worse in many ways, maybe because I still have a bias towards looking at growth stocks. But after the last week, we came down, and at first we sort of moved up on Wednesday. I think what was discouraging is we got up to the 50-day line on Wednesday and then immediately came back down, hitting new lows. All the major indexes basically got to their lowest level since early November. Bounced back a little bit today, but still below the 50-day line. Probably ultimately the market didn't show a lot of change, at least on the S&P. I mean, there were certain areas that looked weaker, certain areas that looked stronger, but still the market rally under pressure, and one that generally investors should probably be staying away from.
Mhm. And I guess one of the difficult things here was not only did we have kind of that attack up to the 50-day moving average line that got denied, but that was following that attack we had up to the 200-day line not too long ago on the S&P 500, where it immediately turned tail, and the drop was just so much more dramatic. It just seemed like, again, once we undercut the lows of December, uh, I think there was a lot of fear of how much lower can we go here. What are you thinking? I mean, I think it was a little tough when that first glimmer of hope after such a sharp pullback happened, and it was immediately responded with another drop. Is it kind of dashing the optimism that's out there, or do you think that there's still kind of some of those investors that are thinking, hey, anytime there's a chance to buy in the dip, I'm still going to take it?
There still feels like there's some of that going on. I mean, you can feel like the moment anything positive happens, but it just can quickly get squashed. And that's happened throughout the whole rally. Even when we were trending higher, there was still this, we rally up and then pull back. So it's been tricky the whole way. Yeah, we could rebound. The 50-day line would just be the first test. We could also undercut and start heading lower, go down to these lows, even in a worst case scenario, go down to the bear market lows. But we could also go range bound. I know you've talked about in the past at various, situations that, there could be a transition after a long bear market. Sometimes it takes a while. And we're transitioning now from high inflation to now recession fears. The market doesn't quite know what to do with economic data. I mean, yesterday, the market seemed to sell off on strong GDP data and then seemed to really sell off on a another weak indicator of leading economic indicators. So it's just that kind of market.
Yeah, yeah. So, I mean, of course, we also have to take a look at the NASDAQ composite just to kind of get a gauge of where growth is. And uh, by and large, growth is still really having a lot of trouble in this market.
Yeah, I mean, NASDAQ was always one of the lagging parts of the market in this rally, never got up to the 200-day line, sold off really hard last week, and it was a loser this week. I mean, it was a pretty solid loss. While the S&P was went down a little bit, the Dow was up a little bit for the week. This one was significantly down after last week's loss, so no real bounce there. A lot of the mega caps are down pretty sharply, but even aside from Tesla and Apple and Nvidia and those names, there was a lot of broad-based losses in this group.
hmm So, okay, if you kind of X out the big mega caps, I know one of the things that you did on IBD Live the other day was you brought up QQQE, which is an equal weighted ETF of the Nasdaq 100. Normally we do market weighted for QQQ, where those big mega caps get a lot of weight. Between Apple and Tesla, Google, all of those. So is QQQE showing you a better picture, or is it just as bad?
Well, it was better. I mean, back early December, because it was getting up to these highs. It was looking
Right.
pretty strong. Okay, but it's pretty significant. It's still got some distance to the 50-day line. It looks a little bit more like the S&P. I guess another thing to look at would be RSP, which is the equal weight S&P.
Hmm.
That looks a little better because that one is right up, actually got back above the 50-day line. So there's a little bit of underlying strength, or let's say less weakness once you get beyond some of those mega cap growth names. But, this still isn't great. Even this still has a lot of challenge. This isn't a market that says, boy, that's a screaming bullish scenario.
Hmm.
It's so, you want to take it a grain of salt. Yes, some of the mega caps are really hurting, but that's not hiding too much strength underneath.
Right. Now, shifting our attention to the small caps, if we take a look at IWM, which is an ETF that tracks the Russell 2000, um, it doesn't seem like these are the small caps are necessarily doing any better.
No, no, the small caps, and that one was really a leading area. It crossed the S&P, the 200-day line, much like the Dow did, but then really has struggled since then. So yeah, that's something to watch out for. Some heavy selling in these days. Yeah, the small caps are below the 50-day line. The NASDAQ's below the 50-day line. The S&P's below the 50-day line.
Right.
There's a theme there, and it's not a very positive one.
Well, now we have to just kind of round out this discussion of the indexes with the Dow Jones Industrial Average, the only index that is really still getting support at the 50-day moving average line. But of course, while it's not market cap weighted, it's price weighted, but there's only 30 stocks. So is this giving you a clear picture of the whole market, or is it really just because of some of those stocks that were doing very well that is leading the Dow Jones to outperform?
I mean, a little bit of both. I mean, we often don't look at the Dow so much because it's just 30 stocks. And even though they do try to get a mix, but to be fair, industrials are doing relatively well. I mean, some of the names in there, yeah, there's your Caterpillars, your Boeings, and some other names. But if you look at other stocks in those groups, there's some strength there. So it's not as irrelevant as we often think. There are some areas of strength, but even here, what it is like, these are areas like stocks to watch, things like in many cases, because things have pulled back. So things haven't broken down. There's things that could look good in a few good days of the market, but they're having a little bit of trouble right now.
hmm Well, let's take a quick roundup of some of the sectors. And one of the sectors that keeps on coming up, whether it's the biotechs or some of the equipment makers, is that medical area. So XLV is the Spider Healthcare Sector ETF. And what's your take on the strength that we're seeing here, or maybe not so much strength as a resilience to going down?
Yeah, it's a resilience to going down. I mean, look, there's a lot of defensive growth names in here. A lot of those drug makers, health insurers, hospitals, a lot of things in there. I mean, there's some growthy names in there that are more growth, but healthcare spending stays fairly constant in a weak economy because so much is the government, so much is insurers, that it can be fairly safe. So in a choppy market, a weak market, defensive growth in medical stocks often do well. So I think that may reflect it. There is the concern, and we saw that a while ago when growth had some really strong days about a month ago, that defensive growth in some of the health medical names struggled. So just because defensive growth names do well in this kind of market, they're not necessarily going to be the leaders in the next rally, though I do think a lot of medicals will.
hmm Now, with all this talk of inflation, sometimes we get into the idea of hedging. XME, that's kind of a hodgepodge, though. It's not just your gold miners. This has got your steel, uh, your metallurgical coal. It's got a little bit of everything in here. So what's your take on the miners? Is there something interesting happening with these guys?
I guess the one thing is that this seems to suggest that we're not going into a global recession. Now,
hmm
this may be wrong. Investors may be wrong.
Maybe
I
just
mean,
hasn't
just
shown the signs yet, right?
yeah, they just haven't shown the signs yet. But it's like, I mean, yeah, it is pulled back a little bit. But again, like so many other areas, it showed some strength. It's pulled back. If we get some market strength, there's a lot of interesting steel and coal and gold and regular traditional iron and copper miners that are looking interesting. Aren't really presenting buying opportunities yet, but they could. So, I mean, there's a whole lot of that going on. Healthcare is one, metal and mining is another.
hmm Yeah, and while we're on the talk of commodities, I mean, we can't leave oil out of the mix. So XLE, which is dominated by ExxonMobil, ticker symbol XOM on that, and also Chevron CBX. This one, I mean, for as bad as oil, the spot prices looked, some of the companies don't look too bad.
No, and there's some diversification, but natural gas has been weak and gasoline's been weak. So this is interesting. It is how well they've held up given the sell-off, because oil prices just a couple weeks ago were at 2022 lows. This week, oil prices rose 6.9%, I believe. They briefly topped $80 again. So there is some strength in there. I will point out the oil services group, OIH.
Yeah.
It's like, well, that's the ETF there. That's doing especially well. So there's a lot of interesting names there. That's above the 50-day line. But again, if those oil prices move higher, yeah, a lot of these names might do that.
Yeah, and let's go ahead and just wrap this up with a look at industrials. You mentioned industrials looking so strong. XLI is one of the sector spider ETFs that tracks the industrial sector. Another area that is getting support right there at the 50-day moving average line and still well above its 200-day moving average line.
This looks a lot like the Dow in this
Yeah.
action. I mean, right there, finding support of the 50-day line just below the 21-day looks very similar to that. So a lot of names here that people should be looking at too.
And then on the growth side, SMH, semiconductors are so important for tech. Not looking so strong there. Very, very different from that industrial look.
This was very disappointing. I'd say, yeah, the NASDAQ, it's weak, but some of those names weren't looking so good. Some of the chip names were looking pretty interesting. I mean, there's some niche players that were really doing well, but some of the big mega cap chip names were doing better, and it all has fallen apart. That was a really discouraging part of the past couple of weeks.
Yeah. And then also, I mean, just speaking of growth, I mean, ARK-K is one of the areas, whereas the indexes were still holding above their October 13th lows. I mean, ARK-K is continuing to fall further, making new lows, 5-year lows. Is this the bottom?
Well, you would have thought maybe this was the bottom. I
Right.
mean, you don't know where that bottom is going to be. And look, it doesn't help that probably one of the very top funds is Tesla, and that's down like 37% this month. I mean,
Hmm.
but there's a lot of other names that are down. Like growth is really struggling. And yeah, picking on ARK, and they've obviously have a really tough time, but boy, there's a lot of pain in the growth sector.
Yeah, risk management is very key. So let's talk a little bit about stocks. And in the finance area, we haven't talked too much about that, but credit card, payments, Shift4 Payments, ticker symbol FOUR. This is one that did get quite a hit, but this has just been skating right above that 200-day moving average line for a while. And after a fairly long flat base, it looks like it's trying to come out of there. What is it about this company that maybe is a little bit different from a lot of those other payment processors?
Well, I mean, their growth is pretty strong and, actually accelerated this last quarter. It's moving into a bunch of new markets. It's sort of focused on restaurants, maybe events to start, and it's trying to go into a lot of different fields. This was our stock of the day, and Reinhard Krauss went into some of the details on that. Yeah, the relative strength is looking pretty strong here, highest in 8 months or so. I don't know if it has a really good actionable thing. If this were a wild bull market, you might be saying, well, I sort of see this, and maybe you can sort of use the old buy point, even if it's not valid. I don't know if I would do that in this kind of market, but it's one to definitely be watching
Hmm.
because it's showing this strength. The growth rate is still pretty good. The PE is not crazy, when you think about it. And we'll look at a name that maybe has a crazy PE, but I think there's a lot of reasons to like it. Doesn't mean it's going to work. And if the market doesn't do well, this probably will struggle too. But there seems to be some strong action here.
Yeah, of course it is hard right now. We've been talking about a lot of these breakout fake outs, and whenever things are getting into
Yep.
recent highs, it's kind of like you're just waiting for that other shoe to drop. And especially because of that range bound market that we've been in, it seems like a lot of the stocks have gotten range bound. So as it gets up to the top of that range, you got to start wondering, okay, is this it for now?
And
So
I think something else is that this is the relative strength versus the S&P 500. If this was the relative strength versus the NASDAQ, it would
mhm,
look even better. I mean, at
right,
least the
true.
last few months, because among growth stocks, this is doing very well, and the other names too.
Yeah. Let's take a look at Celsius. A lot of people have been talking about this drink maker for a while. And it had kind of a rough go of it for a while, but now here we are. We formed this base on top of the 200-day moving average line. It's back above its 50-day moving average line, arguably forming what could be a handle here. Staying above that 100 level, but it did get some pretty solid resistance at 120. What would make you think that Celsius is maybe ready for another run?
Well, I mean, it's holding up pretty well. The RS line is pretty strong. It's dipped a little bit, but that's after, solid gain here and a huge run here. I actually like how it's pulled back. It was pretty extended from the 50-day line when it was breaking out, 27%, 25%. Now it's getting closer. And on a weekly chart, it's getting pretty close. It almost touched the 10-week line,
Hmm.
earlier today. So it's been fairly orderly, drop for on the weekly. I think that's good. So maybe a bullish bounce from here, maybe getting back above the 21-day line could offer an early entry. And again, because I would also sort of break the downtrend here. You could break a downtrend. Again, it's a weak market, and you can see the big moves. Some of these moves don't look so big, but there's some really large moves up and down. So making any purchases in the current market, investors should be very cautious about.
Yeah, not using bull market rules in a bear market.
Yeah,
One more thing, just looking at that weekly chart, I wanted to comment on. Uh, this base looks so tight in comparison. When you look at that big base that it had, previously. I mean, it had this really deep, really deep base before, and this most recent base is got a depth of 34%. So it's not, it's not like it didn't give up ground, but comparatively, it looks very tight compared to that previous base.
that's a good point. It wouldn't be the worst thing if it formed another base. It is actually a few weeks into a new base. To actually have a tight base would, I think, be really really encouraging on that front.
Yeah, this does seem like it's gotten a few bases that have been pretty deep. So we'll see if this is bodes well for it to be able to hold above that 10-week moving average line this time around. And let's go ahead and end this with Impinj. A lot of looking at the chips, and certainly that Micron news earlier this week was a little devastating for the chip space, but Impinj seems like it's holding up fairly well. The ticker symbol on this is PI, and here's another one that's holding right above that 10-week moving average line and just really hasn't given that much ground up compared to a lot of the other stocks out there.
Yeah, I mean, this was a big breakout. And so, as opposed to Celsius just pulling back to the 10-week line within the base, this is much more bullish, pulling back to the 10-week line, above the buy point. So yeah, it was really nice action. The first or second pullback to the 50-day, 10-week line is often an opportunity if you can get that strong bounce to buy. Again, that's more bull market rules, and this is a bucking bronco market, if anything. So it's not a bear. It's not, and we don't know yet. So it could. So maybe a bullish move could be something. Really strong growth. All of these have strong growth numbers, and I think that's something. I wouldn't focus on it. This is just we're focusing on some growth names this time, but definitely shouldn't just be looking at growth names. But the RS line holding basically at highs. The blue spikes have been more frequent than the reds. There's nice niche that plays it is with barcoding and just sort of tracking that it
Hmm.
does. So a lot of reasons to like this. Definitely, I don't, right now it's not a buy, but it could be soon. Again, have to weigh that against, do you want to play that with the market? We talk about can slim with the M being for market. And if without M, you're just being can sly, and you don't want to be try to be sly.
Yeah.
You'll get canned
Yeah,
in that
very
situation.
good. Okay, so what should investors be thinking of? Okay, we've got the market will be closed on Monday for the Christmas holiday, and so you got a long weekend to kind of think about what's happening. But when we come back, there's a lot of times less liquidity going into the end of the year. We still have this indecisiveness about what the Fed is going to do. Are they going to be slowing down their rate hikes? It was nice to see 50 basis points this last time around. People are looking at, hey, maybe the hikes stop early in the year. I don't know that anyone's really thinking cutting is going to happen, but there are those recession fears. So, since a lot of this is kind of up in the air and the market hates uncertainty, how should we approach the final week of the year?
Uh, Probably fairly gingerly. I mean, again, it was going to be like light volume, and the market's sort of uncertain. When we come back from the new year, we'll have the jobs report, which will probably,
Yeah,
roil things again. So, I mean, there might, if we rally, we do well, there might be buying opportunities, and you just have to, be real cautious. If you do anything, take it real slow, or even just play ETFs real and just take a real small position, because we're not in a real uptrend. If we were in a real uptrend, if the December had been going, if we were like at the December highs and moving higher, then it'd be more like, oh, okay, I can play new things that come up. So it seems to be a time that you still want to keep your watch list fresh. I mean, looking at those ETFs we looked at before, there's a lot of ETFs and the underlying stocks in there that are looking interesting, and even some growth names, the ones we just looked at. So you should be building up those watch lists. But another thing you can do is review your trades over the past year. Look at your big winners and losers. Look at the trades that you thought about making, but wish you had, but didn't. Well, why didn't you? I mean, was there a
right.
good reason, and it just turned out to work out, or and just so look at your rules. Did you follow your rules, and were your rules sound? So those are things you can do. Next week, probably to prepare for 2023. At some point, there'll be a big rally. I don't know if it'll be January or it'll be December, but we'll probably have a nice rally somewhere in 2023, and that should be the what investors should be looking for.
Yeah, and as you said, there's plenty to do. Maybe use next week to kind of come up with some post analysis insights. Maybe some New Year's resolutions. But certainly, as you mentioned, those ETFs are showing signs of strength. And if you go under the surface, you're probably going to find some of the potential leaders that are showing that relative strength as well, because that's usually where the future leaders come from, the ones that hold up and are the most resilient. So thank you so much for your insights, Ed. Hope you have a happy holiday, as well as all of our listeners today. We will be back on Tuesday after the holiday. Allie will be back in the hot seat, as she usually is after her short little vacation here. But have a happy holiday, everyone. Thank you so much for watching. And if you haven't gotten a chance to watch IBD Live, we're also going to be back on IBD Live in the morning. We start 10 minutes before the open, and we go about an hour and a half into the session, doing a lot of analysis, and all of the things that you heard us talk about here today. We're doing live every morning. So I hope you join us for that at investors.com/IBD Live. Have a great holiday, and we'll see you next time. Thanks for watching.